Is it time to sell all of your Bitcoin and crypto, or time to buy more? Today we're going to take a look at how the media manipulates you to get your coins out of your pocket and into theirs, as well as how an ETF could potentially be a huge bearish event, and where Bitcoin dominance and where the price is right now. Hey guys, Sheldon Evans here, welcome back. Or if you're new here, don't forget to hit the subscribe button and turn on all of those bell notifications. So on my display right now, I have the Bitcoin US dollar chart open, and as you can see, we are still stuck within that very, very small range between 30,300 and 31,300. So $1,000 range that we've been stuck in since early June or mid-June. Now, we've just broken a little bit to the downside after a small move after CPI data came in better than expected. But we're going to discuss what that means and why that might not be a very accurate data to base your trades off of, and why you need to understand how data can be manipulated to move the price in whichever direction they'd like it to move in. So the first thing we're going to look at is how the market manipulates you. So let's take a look at this. Gold surged 350% after the first ETF approval. Could Bitcoin do the same? Now, this is an interesting thought because if an ETF is approved, obviously it gives access to a lot more people to the crypto market and to Bitcoin specifically, and it changes the narrative around Bitcoin and legitimizes it a little bit, especially if a huge asset manager like Blackrock and Vanguard and all of these huge guys are pitching for an ETF approval. It legitimizes it a bit and gives a little bit more credibility to Bitcoin. But the problem with this is that while that might be the case, it might legitimize it slightly. In the past, this hasn't really led to a huge price rally, or at least speculative price rally in the price of Bitcoin. And we can see this if we take a look at the Bitcoin's futures that launched in 2017, December 2017. If you guys remember what happened when the futures were launched back in 2017, well, if we pull up our Bitcoin chart, let's go back to December 2017. Oh yes, that was the Pico top of the bull run in 2017. Around the same time, the CME futures were launched as well in December 2017. Great, perfect timing, right? Then if we go look to the Beto Pro Shares ETF that was launched in 2021, that is 2021, late October 2021. Oh, let's take a look at what happened around that price. Oh yes, the actual very top of the market that we had in 2021. Also in 2021, we had Coinbase going public at a $100 billion valuation. Well, let's take a look at this. When was this? 14th of April, 2021. Let's go see what happened on the 14th of April. Oh yes, that's correct. We had a huge, massive dump to the absolute bottom of the bear market by 60%. So these huge astronomical events that everyone looks forward to, that they're trying to either front run or looking forward to potentially pumping the market because it brings huge access to the market, huge access to crypto, huge access to Bitcoin, aren't always the bullish events that you would like to hope. And that's why I'm saying that if the Blackrock ETF does actually get approved, it might not be the best time to accumulate. I do believe that once it gets approved, perhaps we have one last push to the downside, and that will be probably one of the best accumulation points that we have. We'll get into the charts in a second as well too. I'll give you my ideas as to where I'm looking to accumulate more Bitcoin if we do get that dump that we're hoping for. Now, another thing that I want to touch on is the, let's say, hypocrisy that we get from different news sources in the media in order to push the price in whichever direction they see fit. Now remember, when these huge asset managers come into the space, it's nothing to them to spend a bit of money on some PR, on some media, to push the price, or at least push the sentiment around an asset up or down to their advantage. So if they're shorting the market, they put out some FUD. If they're longing the market, they put out some bullish news. For example, there's no reason that Larry Fink and Blackrock would be putting out this bullish news that they're launching, or at least pitching for an ETF, or at least try and make it so public and get so much PR around it, if it wasn't in their best interest. They don't do anything that's not going to turn themselves a profit. And the reason that I can say this is we can see how they've sort of flip-flopped on their narrative over the years, right? So if you guys can remember back in 2017, BlackRock CEO Larry Fink was calling Bitcoin the index of money laundering, and they had very negative thoughts on Bitcoin. So did JP Morgan, so did all of these huge banks and many of the asset managers as well. And everyone was very public about how they hate Bitcoin and it's one of the worst things and it's so bad for the environment and all of this. And then suddenly there's a flip to now Larry Fink saying that Bitcoin is digital gold. Yes, so we've been saying this for many, many years. And the reason they're saying this now is, of course, it's in their best interest to drive a product that they're trying to get approved to get people to buy through their ETF so that they can make a profit off of you if you don't understand how crypto actually works. And that's the interesting thing about ETFs as well, is they're using old technology to trade a very new technology. Boomer tech for Gen Z tech, if you wish. So I urge you to really think about where the price of Bitcoin and the market is moving in relation to the news that's coming out. And that's why I said, like, if we take a look at the CPI that came in today, better than expected, 3% lower than the 3.1% expected. Now, that might sound good, but the market still isn't great. The housing market's still super inflated. Groceries are crazy expensive. Gas is still expensive. Nothing's really coming down. Inflation's not really coming down, except these numbers are lowering. And why is that? Well, if you remember, late in December, the US changed how the CPI is calculated. So they can manipulate these numbers. That's why statistics are so interesting in media, because they can be manipulated however you like. Statistics, studies, all of these things, anything that involves numbers, playing with numbers is a very interesting thing, because you can really change how they are perceived based on the calculation, sort of what data you're looking at, how data correlates to other data. There's a lot of stuff that you can look at and change and manipulate to then get a different outcome, or at least perceived result. And if you push that into the media, sure, that changes the narrative, especially if you have a huge reach like many of these news agencies do. So I want you to be very mindful of that when you're looking at the chart and when you're trying to figure out, is it time to buy or time to sell? And the reason that I say this is that if we look at the chart right now, right, there's a lot of bullish news around Bitcoin. There's probably the most bullish news that we've ever had. Back in 2017, of course, we had MicroStrategy sort of announcing that they're buying Bitcoin. That was our big first institutional wave of crypto guys or TradFi guys coming into crypto and giving us this huge wave. But we've got all of this bullish news, yet we don't have as much volume. We haven't had this crazy run-up price rally. Why? Because these price rallies, at least these parabolic price rallies, are driven by who? You, the consumer, by retail investors, not by large institutions. And I can show you this if we look literally on chain. So the easiest way to see this is just to look at addresses with balances, let's say above 1,000 Bitcoin, right? If we look at this, you can see that, let me just zoom this out to 5 years, that when balances are dropping, this orange line, meaning that a single Bitcoin addresses with balances greater than 1,000 Bitcoin are dropping, meaning that people are selling or offloading their Bitcoin, or at least distributing them to different wallets. The price is still rallying like crazy, while these guys are distributing to who? You, the retail investor, because you think we're going to go up forever, but they know that they need to unload their bags and they need to sell to someone, and they're selling to you. And that always happens. When we reached this peak here, you can see since then they've just been offloading to slowly but surely, and the price has been declining, right? And that's pretty much always the case, is they're looking for someone to sell to. That's how the media manipulates the prices. They drum up positive news, the price goes up, they sell to you, they FUD it back down, accumulate, and rinse and repeat. And the cycle repeats over and over and over again. And it's very important that you monitor this. An interesting way to monitor this is, of course, by looking at not just the price, but looking at total 2, looking at Bitcoin dominance. And I'll explain these in a second. But total is essentially the total crypto market cap, right? We're down from near $3 trillion, still 1/3 of the way there. So the price isn't quite where it should be. We're a little bit higher than that, away from the peak. So we should get just over 2x up to the top of the peak here. But the total crypto market cap is still also only 2/3 away from the top. So if we do want a huge crazy rally like we did in the past, we're going to need a ton more capital come into the market in order to push this price back up to where it was in the past. Especially if we're going to look at the way that capital moves between Bitcoin and altcoins and other coins in the market. And the easiest way to look at that is by looking at Bitcoin dominance, right? Now, if we look at this very carefully, you'll see that we did break up to the upside after the 46% rally that we were monitoring for quite a while on this channel. Although we're reaching a level here that is proven to be a huge resistance back in the past. If we go back here to 2018, once we broke above this level, we did have basically sideways movement for Bitcoin for a while, but then we did have the crash from 6K to 3K, I think, at that point. 2000, let me bring this chart up here. 2018, yeah, November, so we were around 6,800 and we dropped to $3,000 at the end of 2018. And Bitcoin dominance was above the resistance that we're at right now, meaning that if we do break above here, it's very likely that Bitcoin's still in somewhat of an accumulation zone, but we have maybe that crash later this year or early next year when the ETF gets approved. At least that is my thought, or at least in my opinion. Obviously, nothing's set in stone. That's the whole point of crypto. That's the whole point of trading, is trading on probabilities. What's more likely or less likely to happen? Based on the data that we have, I believe this is more likely to happen because we do have at least some proof from history. Of course, I could be completely wrong, or I could be completely right. Only time will tell. But as I said, we are approaching super high RSI levels. Stochastics also quite high here, and we're approaching historically strong levels, which is the 200-week here that we've got rejected from multiple times on the Bitcoin dominance. We're approaching that, and we're approaching the historical resistance here. So there's a lot of confluence here telling us that perhaps this is a very strong resistance that we do get rejected from. If that is the case, Bitcoin's likely to remain stagnant or perhaps even decline slightly, and some of that money maybe flows into altcoins, and we have somewhat of an altcoin market, or Ethereum catches up. And we can see that if we look at Ethereum BTC or ETH BTC. So if Bitcoin dominance is to decline, it's likely that we have a bit of a shock down to the downside here. I mean, a bit of a pump to the upside at least, because that capital will flow back into Ethereum, not necessarily completely out of the market if Bitcoin does lose some of its dominance. That's most likely here what's going to happen. The reason that I say this is we look at least interaction between Ethereum and Bitcoin, not just a single chart on its own. I like to understand what's happening between the different tokens and between the different assets in the market. It gives you a better idea of what's more likely to happen. So for example, if Ethereum was higher up here against Bitcoin, and Bitcoin dominance was where it is right now, that's likely, in my opinion, going to say that Bitcoin's got a higher likelihood of pumping its dominance to the upside because we would be at resistance here, and it's likely to come down. So these are generally inverse. It depends on sort of where the market is, how capital is flowing in the market. As I mentioned in my previous video, capital right now isn't coming into the market as new capital. It's kind of the recycled money, recycled capital that's moving around from coin to coin, from altcoins to Bitcoin to Ethereum in the market. It's not really new capital that's coming in. And until we have new capital, until we have retail capital coming in, and I believe perhaps that's likely later in the year or after the ETF, and potentially after the Bitcoin halving. As you guys know, the risk to reward ratio after the halving is way better than before. I'd be more inclined to say that yes, we're definitely in a new bull market and we're going to make new highs. At this point, I'm not quite sold on that narrative, on that theory just yet, especially with what I've just mentioned. We have these sort of TradFi guys coming in that could potentially screw things up a bit, especially with the amount of capital that Blackrock has. They can probably move the market in any direction they like. So that's another reason why it's kind of a catch-22 here. Do we hope that these traditional guys come into the space and legitimize it, but then potentially have control over it, or control over the price at least, and can manipulate the market just as they do the traditional market? Or do we not want them in at all and we still trade around and throw our own capital at one another, hoping that we turn a profit? That's completely up to you guys. Or at least your opinion. I'd like to know in the comment down below. Do you want the TradFi guys to come into crypto, or are you better off just us trading our shitcoins in peace? Let me know down in the comments below. If you made it all the way to the end of this video, please comment down below, "You can't have my coins." As always, I shall see you in the next video. Cheers. Bye-bye.